Hello everybody and welcome back to the channel. My name is Smart Money Mo, and in today's video we're going to be going over the best entry model that I can give you guys using liquidity and supply and demand. And I'm also going to be breaking this down through an example on gold. It's a really beautiful example and we'll get onto that later. But before we get onto that, I quickly just want to go through a couple of things. So I'm adding something to my mentorship, which is that I'm going to be doing multiple weekly case studies and backtesting sessions, and this is going to give the members in the Discord insane amounts of knowledge and value. On top of that, we have I'm adding sections for trading plans, which is going to be direct guides on how to trade from day to day, right? And as well as that, we have all of my scalp strategies, swing strategies, and my SMC strategies, right? So the value coming towards the end of 2023 is going to be bumped up and it's going to be absolutely insane in the mentorship, right? And if you guys want to get in on this, you can read all of the benefits here and you can get involved in this in the first link in the description. But without further ado, let's get right on to today's video. Alright everyone, so to get straight into the action, I'm not going to mess around, and we're going to go straight onto the entry model itself, right? So the first thing that you guys need to understand is that we are looking for a bias when it comes to this model, right? And the bias that I'm looking for is either from a supply or demand zone or an area of fair value gap, right? So an imbalance. And I'm just looking for price to come into this level. And yeah, so now we're just going to get right onto the steps. So first things first is that we wait for price to tap into supply and demand or fair value gap. So we can see here on the entry model example is that we have a fair value gap right here, and then over here we have price tapping into it, right? And that's all that I'm looking for so far. Now after that, I go onto the lower time frame and I wait for a liquidity sweep, right? Because this is going to give me the lower time frame confirmation that I need to validify my higher time frame bias. So at the moment I have the higher time frame bias, and I'm expecting for price to mitigate, the fair value gap or the supply zone that's here, and I'm expecting price to crash towards the downside. Now, for me to get a necessary lower time frame confirmation so that I can enter, for example, from the 1 minute, I need to see a lower time frame liquidity sweep, and I also, which I forgot to mention, is I need to see a market structure shift as well, right? And the liquidity sweep that's going to happen on the lower time frame, it can happen before price actually tags into the fair value gap, or in a different scenario, which I'll draw just below here. So an alternative scenario is price taps in to the fair value gap, right? And then afterwards, we can see that price might create new liquidity and then grab that liquidity, and then we see a break of structure towards the downside coming into play here, and then we can say we can enter from there, right? And then we can short the market from there, right? So that's an alternative example, but usually it will look more similarly to this, where on the way up, price will take out a level of liquidity, mitigate the zone, whether it's a supply and demand or fair value gap, and then after that we will enter from the lower time frame supply and demand that has inducement, right? So when it comes to this specific entry model, I'm looking to keep my win rate as high as possible, right? And in order to do that, I need to make sure that the supply zone I'm entering from, or the demand zone, has inducement, right? So as we can see here in this entry model, let's actually analyze it. So the first thing is we have this liquidity sweep. We have the high time frame bias from the fair value gap coming into play here. We also then have this lower time frame supply zone that has a confirmation from this market structure shift down here, right? And this, most importantly, has inducement, right? And all I'm looking for is, in terms of inducement, is, for example, relative equal highs just below the zone, or for example, a supply zone that's positioned below the supply zone I'm looking to enter from, right? Anything of that nature for me is going to act as inducement. Therefore, this setup becomes a highly probable setup, and I will, my win rate increases dramatically, right? So yeah, this is essentially the guide for this entry model. It's a very simple guide, and you guys know that I like to keep all of my sort of trading simple and explanation simple. And yeah, now we're just gonna head straight on to gold, where I'm gonna give a further breakdown of this specific entry model. And yeah, I'll see you guys on the real life chart example. Alright everyone, so here I am on gold, and before we get into the breakdown, I'm going to give you guys a bit of context behind this trade. So on the 10-minute time frame, we are of course bearish, right? And gold was bearish completely for this week, and I had actually identified this level over here, which was a level of consolidation that happened during Asia session and London session, right? And you can clearly see here we have these relative equal highs, we have these relative equal lows that I'm looking for price to sweep during New York, right? So if I was to give a projection for New York, I would expect price to A, sweep all of these highs, and then B, sweep all of these lows, then mitigate and drop even further. And when I say drop even further, I mean drop even further to this level of daily demand down here, right? That's where I'm expecting price to come to. Now we head back onto the 10-minute. So that's what it looks like on the 10-minute. The overall sort of analysis is price consolidates during Asia and London, leaves me relative equal highs, leaves me with these equal lows. I'm expecting price to sweep the highs, give me a break of structure, then mitigate a supply zone, then come all the way down to this daily low over here, right? So now that we have a sort of built up bias and we have a built up idea of what we can expect in New York, we're going to try to apply that entry model that I was talking about earlier for this specific trading day. So let me delete this box and let me do the line markup. So we have our relative highs over here that I'm expecting price to sweep. And then after the minute after price sweeps this, we're going to drop down to the lower time frame and start applying the entry model, right? And I'm also expecting price to take care of these lows. Take care of these lows and give me my break of structure, right? So yeah, let's play this out and see what happens during New York. So instantly we get that liquidity sweep and we get that break of structure, exactly what I was looking for to happen in New York. And on the lower time frame, we also get this liquidity sweep, further confirming the sells towards the downside. Now let's bring in the entry model. So I mentioned, guys, that I'm going to be looking for a sort of bias, right? And the bias is going to be a supply and demand zone or a level of fair value gap. So the first things first was I spotted this 2-minute level of fair value gap, and I spotted this 2-minute level of supply right here. Now this is step one. It's just identifying the levels where I'm going to create my bias from, and these two levels are completely valid because we have this liquidity sweep and we have this lower time from liquidity sweep, and we have this 10-minute break of structure towards the downside, confirming our bearish bias. So come down to the 1 minute. We have the levels which are going to be validating this trade. Now all we have to wait for is price to come up to this level and give us a liquidity sweep, as well as a tap into one of these zones. So price can tap into here and start dropping off, or price can tap into here and start dropping off. As long as I see a liquidity sweep before it happens, that is the level that I'm going with. So yeah, let me show you guys exactly what I mean. So here is where I'm certain that we've seen the entry model play out. Why? Because what do we have here? We have these relative equal highs and we have this level of supply down here that is taken out by which move? By this move. And where does this move tap into? It taps into the fair value gap. And after this move happens, what are we left with? We're left with the supply zone. So we've just had steps 1, 2, and 3 laid out in front of us. Step 1, we had the fair value gap. Step 2, we had the liquidity sweep. Step 3, we had the supply zone that creates the break of structure, right? And of course, the other part was inducement, but we'll get onto that in a minute, right? We have this break of structure confirming the supply zone. We have the liquidity sweep. We have the tap into the fair value gap. Now let's talk about inducement. So over here, we clearly have these relative equal highs acting as inducement. We have this supply zone as well, right here. The supply zone also acting as inducement, and we have the fair value gap here acting as inducement, right? So we have clear inducement for this supply zone, as any sellers who are going to position themselves in this area of the market are going to be induced, and this is the supply zone that created the liquidity sweep. So we have our entry point. We have the entry model that I was talking about at the start of the video. It's laid out in front of us. We have the break of structure confirming our bias. We have the overall bias and we have the 10-minute liquidity sweep and the 10-minute break of structure. Now we have our targets, which is that daily level of demand, and we have an easy New York trade laid out in front of us. And if we just go through the results here, price taps in and just instantly melts towards this level of daily demand. That is a potential 1 to 12 hits in the space of 1 hour and 7 minutes. So the potential with this entry model on the lower time frame is insane, and I hope you guys will actually take all of this into account and you will apply it into your day-to-day trading. So yeah, if you guys did enjoy this video and you found it beneficial, then make sure to leave a like and check out the mentorship in the link in the description, the first link in the description. And I will see you guys in the next video.